Less than 4 minutes to go in a pretty dramatic week here in the markets. The dip buyers are showing a little bit of resolve going into the close. You have the Dow up about 337 points right now. We had been up over 400 points toward the open, so there was a big bounce attempt in the morning. It got tested. Some sellers came in. It faded. Very similar to a lot of the activity you often see after a big sell-off. Remember, S&P was down more than 5% over the prior 2 trading days. So right now today, we're getting back maybe a little less than 1/4 of what was lost in a couple days. We've got Bob Pisani and Kenny Polcari here. Kenny, does it tell us anything about Monday?
Listen, I got to tell you, I thought they were going to close on the lows today. I'm quite surprised that this is how they're doing it. If they close us above 2765 on the S&P, it does set itself up. It feels like Monday could be another kind of update. Not huge, but just more up.
This is the kind of action, and you know this, that you tend to see it at bottoms here. So up 400, down 400, but all throughout the day they were attempting to buy the market, unlike what we've seen in the prior days where it's basically been very one-sided on the sell side. So I think that's encouraging. We had very high put-call ratios, a lot of people panic buying here. The VIX was in backwardation. That means that the front-month contracts way, way high. People were panicking short-term, but the contracts 2 or 3 months out, much, much lower. That's often signs of a bottom. So I think this is very encouraging right now, but there's been a lot of damage, though.
Right, and so that's the point. That thrashing around, you know, where we're up 300, down 100, up 200, down 50, up 300. That's going to happen until it finds its bottom, until it kind of digests all the damage that's been done to the S&P, the NASDAQ, right, and the Dow.
Yeah, a V is not the usual formation.
Right.
It happens, but it doesn't. And also, when you talk about, Bob, with the VIX kind of formation that we have right now, that does tell you that the market seems a little bit unsteady, at least in the very short term.
Yeah, well, yes, and that's a sign that people are unsure what's going on, so they reach for the protection. That's when you get the put-call ratio 1.2 to 1. Normally, you don't get a lot more put buying than call buying. That's usually a sign of a short-term bottom. So you look for these psychological indicators of short-term panic that usually subside. What I think the broader question are the issues that worried everybody: the high rates, the tariffs, the increase in costs going away. They're not.
They're not.
But maybe, and I'm now hearing arguments. We saw some big papers out today from the firms that, listen, we can handle higher rates. If we get over 5%, it's going to be a problem. A lot of, like historically, if you're below 5% in the rates, you can move up a little bit and you're okay. A lot of discussions about cost. They're putting numbers on it. They're saying at these levels of tariffs, it might cost 2% on GDP growth, or 2% on earnings growth next year. There's estimates, and basically the estimates are, all right, everybody, don't panic. Here's trying to sort of moderate the hysteria tone about this laundry list of worries.
We'll hear from the companies next week. And what's interesting is this quarter we're going into earnings season with stocks beat up a little bit. Not a lot of expectations built into stock price.
Little disappointed to JP Morgan there. A little disappointed that we didn't get a little better response from JP Morgan, because I thought the numbers were good. They do often sell off on the day you start doing that. But JP Morgan's numbers were good. 6% loan growth. I thought that was outstanding.
Yeah, the banks did not help today, but a very good close. 286, 287 on the Dow.